Yo guys, so for today's video, right, I'm gonna be covering on Bloomsbury Residences and also One Marina Gardens launch day sales. So I think a lot of you know that a lot has already happened the past 2 weeks in regards to the US tariffs. So today I'll be actually covering on how the US tariff, right, can affect the different types of market participants, namely buyers, sellers, and developers in today's market. So stay tuned. Alright, so before I start the video proper, I just want to cover on this upcoming launch, Marina East Residences near Katong Park MRT. So this one is a freehold development and it's a 5 minutes walk towards Katong Park MRT station. If you guys are after the video, you might be keen on this development, it could be worth visiting this particular development because you already know how much the Bayshore land GLS already sold for. So you can kind of gauge what this potentially can match up. And that one is a 99-year leasehold. So those of you, if after this video you might be keen to explore this development or you just want to take a look at this preview, you can WhatsApp me at 84849302. Alright, back to the video. So to start things off, first up we have Bloomsbury Residences and we have a total of 358 units. 25% sold. We only sold about 90 units and remainder of 268 units as of today's recording. And majority of the units sold are actually the 2 bedrooms. So you can see over here the unit breakdowns are 20 out of 38 for the 2 bedroom, 2 bedroom premium 26 out of 76 sold, 22 out of 76 sold. Gradually, right, as we go down the bigger bedroom types, you can see the 3 bedrooms we got 5, 4, 1, 8 out of the total over here, and 4 bedrooms only moved 3 units. 5 bedrooms didn't move anything, and the 6 bedroom plus study penthouse unit, right, 1 out of 2 of the units sold. So definitely I think over here the number of checks, if I recall correctly, it was in the 300 plus range. So the conversion was about less than 1/3 lah. Maybe closer to like 25% kind of range. So honestly, when I see this sales volume of 25%, right, I was quite surprised because Bloomsbury Residences, when you look at the RCR area at this kind of price for the PSF, right, I think definitely is quite attractive. So it could be just bad timing together with the US tariff, I'm not completely sure, but definitely the check count is not as impressive as we see even in the previous launches, which the most recent one we're looking at is Lentor Central Residences. So I think when you just compare between these two, and if you go back a little bit further, when we see like, for example, Alta, so Alta is still considered in the OCR region mah. OCR region for Alta, right, it can even command a much higher PSF than Bloomsbury Residences. I mean, yeah, maybe because Clementi area is a little bit different from this One North area in terms of maybe amenities or the school. So maybe people still don't see One North area as a neighborhood kind of vibes, and they don't see themselves staying there also. So that could be the potential reason why these Bloomsbury Residences, even though the pricing for RCR development actually is priced pretty close to what we see at Alta. Okay, so next up we have One Marina Gardens. I think quite a few people actually confused for this One Marina Gardens, right, to being at the CCR area. It is actually considered RCR region still. And on the launch day itself, out of the 937 units, we have a total of about 36%, 37% sold. And majority of the units sold, right, is in the 1 or 2 bedroom range. Just by the number of units sold alone and in terms of percentage, right, the 1 bedders is the most popular over here. 159 units sold out of the total of 240 units. 2 bedrooms, 127 units sold, and we still have 290 units available. 3 bedroom, 23, 3 bedroom premium, 22, 4 bedroom premium, 15. So over here at OMG, right, I really think for their sales performance is quite good considering the amount of uncertainty there is in the market. And over here, if you look closely, right, a lot of the unit types they are actually skewed towards the 1 and 2 bedders. Out of the 900 plus units, right, actually more than half goes to the 1 and 2 bedders. So today, if you are a buyer entering OMG, you need to be very clear as to what is your objective. Are you looking at for own stay or is it more for a rental play? And of course, I won't dive too deep into the project itself. If you want to find out more, you can just WhatsApp me at 84849302. But overall, I think if you just compare what happened for One Marina Gardens and also Bloomsbury Residences, right, Definitely, these two projects, the sales is quite a big difference from what we see in the previous launches for the first quarter of this year. So for example, when we look at Alta, when we look at Parktown Residences, and we also look at Lentor Central Residences, of course those are achieved like easily 70% plus one. Most of them also achieve very strong sales. So over here, it could be a project related sentiment, or it could be just a general market being more cautious. But definitely, right, from what we see in these two launches, the market has changed a little bit from what we compared in the first 3 months of this year. Okay, so over here are the land plots near Bloomsbury Residences. As I mentioned in the video that I did the review for Bloomsbury, the launch is actually just last week, and we are looking at the PSF PPR of 1191. The bidder for this land is Qingjian. Now, right, when we zoom into this next plot, which is the Media Circle Parcel A, and we are looking to launch probably next year, the PSF PPR, right, is 1037. So we are looking at about 160 PSF PPR difference. So what does this translate in terms of PSF savings? We don't really know, because by right if we already see this kind of price gap for the land, the developer should be launching at a lower price. But after talking to the developers, they actually said that the upcoming launch at Media Circle Parcel A will not be cheaper. Of course, this kind of thing, we also won't know exactly what will happen in the future. If the developer already say that they don't intend to launch this Parcel A cheaper, we really must see what will actually happen by next year, maybe Q2, Q1 of 2026. But that being said, I really don't think Qingjian will actually launch this Media Circle Parcel A cheaper than what we see at Bloomsbury Residences. Because if they really do that, I think their units at Bloomsbury Residences can no longer sell anymore. Because a lot of the buyers, if they actually launch Media Circle Parcel A cheaper, right, they will gonna burn at Bloomsbury already. So I don't think they're gonna kill themselves this way. So definitely, I do agree from the developer's point of view, they are probably not gonna launch cheaper. And actually, when you look at it objectively, right, Qingjian didn't really overbid for the land. It's like 1191 PSF PPR compared to the second bidder, Hong Leong, very marginal difference. And then we look at Media Circle Parcel A, we can also see actually the bidding, the price is quite close one. You're not looking at a very significant margin. So I definitely think that the developer didn't really overbid for the land. And at the same time, right now, if you look at the current market, right, let's say we look at RCR 3 bedrooms, I think it's going to be quite hard to find a 3 bedroom with a quantum of like around 2.1 million, 2.2 million. Today, if you want to still explore your options around this budget range, even for OCR region, there is not much project that you can still get in the 2.1 million range for 3 bedrooms. Most definitely, they are going to be either in the OCR, not near MRT, or what we are looking at, which is Bloomsbury Residences. Yes, it is not near MRT, but at the same time, it is still in the RCR region. Okay, so next up we have the One Marina Gardens GLS. So over here you can see actually the PSF PPR. We're looking at 1004. Kingsford, right? They are probably a lot more aggressive when we compare to, let's say, Guacoland, Far East, and the PSF PPR, we're looking at a gap of about 400 plus. And now you can see for the other plots, right? This is One Marina Gardens, we have 1, 2, 3, 4 more plots. And one of them, right, actually Guacoland bidded for it, and we are looking at 984 PSF PPR. But it was not awarded because to the government, it is actually deemed as too low. Like if the developer actually managed to get at this price, they are gonna make a lot of profit. And this will actually ruin the government's their plan to properly do up this marina area. Because imagine if Guacoland was awarded this 900 plus PSF PPR, right? It is gonna be so close to what Guacoland bought Lentor Central Residences at. So you imagine if they launch at around 2002 PSF for Marina area, right? Guacoland can potentially launch at this PSF if they really get at this bid price, but in the end they didn't. But let's say they really launch at this price. This will not only kill OMG over here, this will also kill the other resale over here, which is Marina 1 Residences and all the other developments nearby here. So definitely when we look at this entire marina area, right, the government is in the end the main developer, I would say, because they kind of already determine how much the land will actually cost. If the land is going to be too low from their own valuation or assessment, the government won't release the land. So as a result, right, even though there is quite a few upcoming plots, they might not even be awarded. You see where I'm coming from? And of course, I don't know what is the government's direction with this area in terms of the land price, but I don't think it's going to be that far off from what we see at Kingsford for the 1004 PSF PPR. So this one, I will really be quite curious for the other developers, right, to go and try to price the bidding at between 1004 to about 1000 PSF PPR. Then from there, we can kind of see what the government is actually, where is their reserve price, how much then they will actually start to let go the land at the Marina area there. I hope there will be developers bidding in between. Then at least we can see where is the threshold. If not, we also don't know how much actually will be pricing it. And the government maybe, they already know that, this OMG already sold at 1004. They might only price the land above 1004, then they accept the bids. This one, we also don't know what is ongoing at the URA, that side. In reference to today's US tariff situation, right, I'm just gonna touch on what happened in COVID-19 as a reference on whether COVID-19 is a worldwide event, right, and whether Singapore properties market, right, experienced losses in this period, or it just remained the same or even went up. Today, why I still want to use COVID-19 as a reference is because if you see today US tariff being on at least the same scale of what we see at COVID-19, then I think this is a very good reference, because if US tariff, for example, it is as serious as COVID-19, then this will be a very good case study to know what is going on in the market and what to expect for the next few quarters. But if you imagine that the US tariff is not going to be a serious impact for COVID-19, right, then very likely the whatever losses that we experienced during COVID-19 will be less serious during this US tariff period for the next few months. Okay, so this is the past 10-year chart, right, for Singapore properties market. And over here, you can see I already boxed some red color. This is the 3 quarters that happened right after COVID. Q4 2019, COVID I think probably happened around November, December period. And you can see actually for Q1 2020, right, this is the private property market chart. You still don't really see a very significant drop in the volume yet, because I think a lot of people still haven't really felt the impacts of COVID yet. I think it wasn't a full-blown disaster, but in Q2 2020, right, I think it was after all the lockdown, everything, then that is where I think the volume really dropped. So you can see the bar, this is the volume of transactions, so it really dropped. The property price, right, Q4 over here, it experiences a slight drop. And then actually in Q2, even though the volume dropped, right, the price still went up a little bit. So if you look overall in these 3 quarters, of course the price went down percentage, but if you continue on, right, you can see actually in the Q3 and Q4 of 2020, prices still continue to go down. If you think US tariff is going to be as bad as this COVID-19, then the max you can kind of expect, if we are looking at, is 4 quarters of downward momentum for the private property prices. Then you can see after Q4 2020, then next up is the next few months, and you already know today's market is drastically higher than what we see at Q4 2020. So the main message here is that, right, imagine if today, let's say now is the start of US tariff, and then we take Q4 2019 as reference, right? Right now, we could be experiencing a stagnant market for the next few months, or even a possible drop. We don't know how severe the US tariff is going to be. From what I see, how the US President Trump is playing it, it seems very wishy-washy, and it's just playing around and trying to abuse negotiation power. So imagine if it's as bad as COVID-19, right? We can still experience maybe 2 or 3 more quarters of downturn. But in the end, when you look at property price, right, and also for private property market, we have something called SSD. So as a result, most of the market participants, when you enter the market, you are looking at least a minimum of 3 years. Because anything less than 3 years, I don't think it makes sense because you need to pay for the seller stamp duty when we look beyond the 3-year mark, right? So let's say earliest Q4 2019, right? And then we already jumped to Q4 2022. You look at the price from here all the way to 2022. And then what if we continue to hold further? You can see actually even 2023, 2024, you can see the significant uptick in the prices. And I don't know if you guys have been following the market, but you can see because of the interest rate increase in 2023, right? We already experienced a little bit of correction for the past 1 year already. 2024, when they started to drop the interest rate, then we start to see like, oh, the market pick up again. So the market already has experienced a little bit of correction in the 2023 year. Then in the end, right, I really feel quite sad. I have some of the clients I talked to, right, during 2019 and 2020, they didn't make a move because they did see the transaction prices going down. It's really true. But in the end, right, they saw what happened here also. Continue to drop. What happened next? When the prices start to rebound, they still feel that the prices continue to go down. And as a result, right, they miss out this entire bull run from 2021 all the way to 2023. So definitely, I think it's quite sad because previously they could have afforded a 3-bedroom at around 1.5, 1.6 million range. But in today's market, right, that one, you barely can buy a 2-bedroom. And for the new launch market, right, 2-bedroom, it might not even be near MRT also. I mean, you can do your own search. You already know 3 bedrooms is impossible to buy a new launch project at 1.5, 1.6 million range. So if you want to position yourself in the property market, especially in Singapore's context, right, try not to look less than 3 years. Because if you look in the very short term, yes, definitely you can still get maybe a slightly better deal, maybe 5% cheaper, 3% cheaper. But what if the market rebounded and then they just leave you behind? Now they are still looking around for options and they haven't managed to make a move yet because they cannot accept that in just the past 3 years, the market has already moved so much from their initial prices that they knew of. If you know today's market and what you are buying into is still a safe asset, then you should make the move because I don't think the market will wait for you in this like limbo stage for more than a year. At least this is my own gauge based on the sentiment. Okay, so now we will dive deeper in, right, by market segment, CCR, RCR, and OCR. For blue color line is OCR, yellow color line is RCR, and then OCR we are looking at is the pink color line. I like to actually just study, right, what happens if a recession really comes. Because I mean, I'm sure a lot of you actually agree with me that COVID is one of the worst periods in the recent years, and also we experience a recession. So right now, what should we expect if we still experience recession going forward? This is how I also would want you to position yourself in today's market. This is just now I highlighted the time period which COVID happened. So in these 3 quarters, you can see for the CCR region, we actually experienced a 11% drop for the new launch segment. And then for RCR, we only experienced a 1.4% drop. And then OCR, about a 3.93% drop. RCR to the CCR region, we have about a $900 per square feet gap. And the main point that I want to bring across is, I want you to notice, right, which segment's price is actually the most defensive in a recessionary environment. Because right now, if you say there's recession coming, right, then why not, instead of trying to time the market, we work with something that we know will still be on the defensive side in the recessionary environment? Because I think that's very important. We want to look long term rather than short term. It's very hard to time the market one, and especially if everyone has very strong holding power or even the developers, then I don't think you're gonna get a very significant price drop. And over here, right, do you see an opportunity? Because if you see that, let's say we take CCI as example, it dropped by 11%. So, and then we also know at the same time for the new launch market, actually there's a lot of new launches coming up for this year for CCR. If really we hit a recessionary environment, how do you think the developers are gonna price their units, right? Especially if they are in the CCR region. That's why I think today, if you are a buyer or investor looking to enter the market, you need to really see beyond the numbers and study past trends. So this is really what exactly happened for recessionary environment. So if you are looking for very cheap deals in the RCR or the OCR region, I don't think it will happen. Very likely, if you want to look for anything that is have like substantial discount, I would think that it should be coming from the CCR region. But this one, you see, right, also must depend a lot on how serious the US tariff is gonna be. Because right now, frankly speaking, right, I'm sure some of you viewers, you work in banks, you are economists, some of you working professional analysts for banks. I'm sure you know what is going on in the global market more clearly than I do. But for me, right, I study more on the property side, especially Singapore's market. This is how I see, right, the opportunities can arise for this year. So definitely don't be too afraid if you are looking to enter or you're not positioned yet, because I think there is still a few weeks or months for this to play out fully. And honestly, right, for those buyers or investors, if you are still waiting for a good deal to enter the market, right, just nice, President Trump already give you what you want. So these few months, definitely you already must be on the lookout, because I'm quite sure if COVID, right, only impacted the market for about 2-3 quarters, maybe we just give it 4 quarters. If today we are looking at April 2025 and this US tariff thing, let's say it lasts for 3 quarters or 4 quarters, right? If you're not in the market by first quarter of 2026, then I don't think you need to continue to look in the property market anymore. There could be better opportunities in the stocks or even crypto, because I think today you already get this ideal environment to look for opportunity because there is a crisis. Imagine if you don't have this President Trump causing this US tariff. I also don't think those two developments, the sales Bloomsbury and One Marina Gardens, would have been so low. It should have gotten a much higher sales if they didn't have this US tariff going on also. So right now, right, it's really for those that can hop on to this opportunity, because I know there are some people already gonna burn by the stock market. Even myself, my portfolio also dropped 10-20%. It's quite normal in when the market crash, but for property prices, we don't even see this kind of drop. Okay, so this part will be for the resale lovers, because I know no matter how much I share about new launch, there is still people that, oh wow, resale also can make money. For sure, resale is the best. So right now, I will also go through what is going on in the resale market during COVID-19. So same thing here, CCR, RCR and OCR. And you can see, right, actually for these 3 quarters, the CCR region was quite stable and only experienced a 0.29% loss. But of course, you can see from the next quarter onwards, the drop was quite significant here. So this one probably is quite aligned with what we see in the new launch market for the CCR region during that same time frame. And over here, this is the RCR region for resale. Resale actually experienced a 5.19% drop in terms of resale prices, and then 1.9% for the resale OCR region. So you can see, right, just based off this simple exercise that I just did, definitely the OCR region for the resale market is the most defensive. RCR is the second one. CCR, right, if you include this third quarter over here, definitely the drop is a lot more significant. So why we actually see like the first 2-3 quarters for the CCR market actually never really dropped. It still hold the price quite strong. My assumption is that the CCR resale market already has priced in the price discovery. So you see, right, CCR, the market, when you compare resale to the new launch market back then for the CCR, maybe the price gap was quite significant from the resale. So that's why developers actually had to do a lot of discount to let go of the CCR units. But when we see the CCR resale, right, they already have the demand and supply ongoing in the free market. So that's why developer sets the price for new launch, whereas the CCR market is where the true price discovery already happened. So the main takeaway is there still an opportunity out here? And today, even if you are looking at the new launch or the resale market, the main thing is whether you can capitalize on this. So the COVID-19 event, right, only caused a drop in volume for about 2 quarters. So if worst case scenario also 2 quarters only, I really don't think what the US tariff is going to cause the market to like crash in terms of transaction volume, all this. I think this definitely caused a lot of buyers to be on the sidelines. So today, if you are looking to explore your opportunities in the new launch and resale market, yeah, you can feel free to reach out to me via WhatsApp at 84849302 to explore your options, because these are the times where I feel when people are cautious, then you need to think ahead. What is going to happen in 2-3 years time, but not what's going to happen in the next quarter. Okay, so next up, this is a very important segment that I have been sharing with some of my clients that are still looking to enter the market and even considering to sell their property. We need to understand, right, who are the market participants and also what are each participant thinking about. So first up, for this 3-person segment, from buyers, developers and sellers, right, I'll be breaking down for each one and then just sharing with you what the current market sentiment is. So from the buyer's point of view, right, definitely there is increased caution. I mean, I'm going to be quite straightforward. For the tariffs, it definitely has impacted some of the industries. So it really depends on which industry you're at and whether your job security is threatened or your businesses might be affected because of increase in tariffs. So all these things, as long as you are not in those industries, then I think that you are in a better position as compared to those involved. So for most of my clients, right, even if they are involved in this US tariff, whether their company or the business is affected, right, most of them already have a safety net in terms of affordability. So they didn't overstretch their budget and installments, right? They probably already have a few months up to 1 year worth of installments covered in cash or CPF. So these are really the times where you need to pull through with your holding power, because if you cannot hold enough, then you are forced to sell, right? Very likely you are selling in a terrible market. At least for my clients, I'm not too worried because they already have buffered for this kind of worst case scenarios in case they lose their job, touch wood. So as we know, property is also a sentiment driven market, and especially those looking to invest in the property market, right? I think sentiment is going to be a very big factor here. I'm not going to sugarcoat this. Definitely volume is going to drop for this month or even the next month. I do see sales volume dropping for at least this quarter. Yeah, then it will probably start to pick up depending on what is the current situation of the tariffs. Third part is that I will still urge a lot of my clients to look at real estate as a longer term perspective, more than 3 years, because of all the cooling measures, seller stamp duty, a lot of speculative purchases has already been driven out from the market, especially those short-term flipping, because the cost of all this flipping is too high. You need to pay seller stamp duty, agent fee, buyer stamp duty. All this definitely will erode into your returns. The fourth thing is potential opportunities. I would say this is the few months or quarters, right, to actually start to look out for good deals, because I really think, like for example, in the RCR new launch market, you already can see that developer actually price very careful and sensitive. And if you go watch my previous video talking about what is going to happen in the new launch and the resale market for 2025, right, you already can see that the RCR region is going to be majority of the launches for this year. Then I really think this is where you should start to do your homework and then start researching on which one is potentially the development you should go for, where you can get good deals even in the post-launch market. Last but not least, definitely the luxury market, right? I do think it will also be affected because the ultra high net worth people, maybe in the GCB segment and the CCR segment, they could be adversely affected, especially if they have exposure towards businesses with the US tariff. Actually, if you look closely on the US tariff numbers, for Singapore in Asia itself, right, our tariff is really one of the lowest over here, and it can potentially drive people to do businesses in Singapore instead. That could be a change in the market for certain businesses. Other countries, their operating costs, manufacturing costs are much higher as compared to Singapore. So people might still choose to come to Singapore to open up businesses instead. Of course, this might not be a direct spillover effects for the luxury market, because when we look at, let's say, foreigners coming into Singapore, very likely they maybe rent their properties, or that they might not enter the CCR property market because of the 60% ABSD still. Depending on what the government direction is, if they want to release this 60%, I'm not even surprised like Marina Gardens can sell out very fast. Okay, so now for the second market participant, we are looking at the developer's point of view. So you see, the first thing I want to cover is the replenishing of land bank. When you see, like for example, Xinhai bidding aggressively for the Bayshore land, a lot of the developers, right, when they bid for the land, their land cost is already fixed. And then now, when we combine together with the tariff, what do you think is going to happen towards construction costs? For example, the Xinhai bidding for the Bayshore, that plot, right? The land cost, we are looking at almost 1,003 PSF PPR already. If you just base on current launches, I'm not surprised if it even launched at 2007, 2008 PSF onwards and even hitting $3,000 per square feet, right, in the OCR region. And on top of that, you imagine what are the cost pressures that we are going to face, right, for developers, because tariffs are, what if it affects the cost of construction? And very likely the land cost, construction costs will go up, and even HDB won't be spared from this cost of construction. If HDB BTO prices keep going up, I also don't foresee new launch for developers. They're gonna drop the price too significantly, because in the end they are still need to cover their costs minimally. So the third part, talking about pricing strategies, I really don't think the developers are gonna price it at such they're gonna make a loss. Definitely they are still profit driven. They are still gonna price it at least at a profit margin, but how much? That is the main question. How much percent? Because today, if you are a buyer, I think definitely developers are going to be more cautious. And like I mentioned just now, in the RCR region, there is going to be quite a few launches. So today, if you are a buyer, you should try to think from a developer's perspective. In the end, right, who has the higher risk? Is it an individual buyer buying one unit, or we are looking at developers who have hundreds and thousands of units available and they need to clear off in this current market? You really need to try and think how much they are going to price their units and what is their profit margin. Naturally, if their profit margin for developers are lower, you as a buyer today, you are going to be able to capitalize on more of the profit. Okay, then the last one, we are looking at project timeline. So I think this is also where you should start to look around for projects that is going to hit TOP maybe this year or next year. As of today, right, I definitely think the buyers are a little bit more cautious. Then definitely for developers, they're gonna feel more pressure. Projects are looking to TOP this year, right? Be on the lookout for them, because I do think you can get pretty good deals, assuming this US tariff still continue to dampen the buyer's sentiment for the next few quarters. But for those projects that even just launch or going to launch, right, you must know that they have up to 4 years to sell. That's why you see in this video, I'm talking about project timelines, particularly this year and even next year. If you want those launches that's coming up this year to launch very cheap, I don't think it's gonna happen because they still got 4 years to sell. And I don't think the market is gonna stay at this current state for more than a year. After 2025, 2026 period, I do see the market come back more aggressively as compared to today. Okay, last but not least, from the seller's point of view, so there is a very likely potential, right, for slower sales, at least for April, May and June, especially for homeowners. Before this tariff, maybe they feel like no choice, the market is going up, they are forced to pay for this particular price. But today, I talk to a lot of buyers because I serve a lot of buyers, right? A lot of them are actually in the mindset where, oh, tariff is ongoing, I'm gonna lowball. But when I actually put in offers for units, especially last week, right? Actually, a lot of the sellers, they are not in a rush to sell one. And now they know that this US tariff thing is ongoing. Yes, the volume might not be as strong. Yes, maybe you can't make as much record price, but they are not in a rush to sell, because I think some of them, they are not in a vulnerable position, especially in the resale market, because of all the cooling measures. You only can take 60% of your income, and a lot of government policies already in place, right? So I really don't think a lot of the sellers are going to be doing fire sales, especially the next few months. But I have to be very frank, the volume is definitely going to drop. So second part, we're looking at price expectations. So these owners, they already experienced quite a bit of capital appreciation. definitely, right, they are able to sell lower than what is the current market price. So imagine, let's say today we are selling at 1 million, but all these owners, they last time maybe bought 700k to even like 600k. If they sell slightly below 1 million, no problem, because they still make 200k, 100k ma. But if today, right, you are a buyer and then you make the record price of 1 million or above 1 million, this definitely will leave you in a very vulnerable position, because imagine if the owner starts selling at 900k, you are going to be left behind, because what if the market continues to go down? That's why I always encourage my clients, right, don't go and create record price, especially in the resale development, because you're going to be buying at the peak. And some of the resale developments for the newer project, I already see they are so close to some of the new launches that it's going to TOP in 2 to 3 years time. So you really need to do the numbers and compare for yourself, right, to know whether this is still a safe purchase, and make sure that you are not buying into something when you do FOMO. Because really in the resale market, I think it is very emotion driven. As a result, people tend to overpay for resale. So same thing here, third part, luxury homeowners. This is also where I see if the US tariff negatively impacts their businesses or their job, right, this is where you can still hunt for good deals lah. Yeah, because all these people, they probably will need to let go of their property, maybe GCB or landed or big bedroom CCR. They need the cash flow to sustain for this period of time. Last but not least, we have this group of HDB owners. So I will kind of classify them as HDB upgraders, because usually you sell your HDB is either to shift to a slightly bigger HDB, or you're looking at condominiums or EC. So for this group, right, as long as your BTO just hit the MOP mark, I don't see a problem in letting go your units, because people are still looking at the newest property. There's always this market. But for people looking to sell, right, you might need to price it a little bit more realistically, because the buyers might be a little bit more cautious, especially even for HDB one. But in the end, I don't foresee HDB volume dropping too much, even though there is this tariff situation ongoing, because HDB is already the cheapest form of home ownership. If HDB market can crash, I really think all the market segments definitely will crash. If you don't foresee HDB market crashing, right, then I really don't think the EC, the private market segment, will be affected. In conclusion, right, when we consider the different stakeholders and viewpoints, what do you think is going to happen to this property market for Singapore? And also taking into account the broader economic uncertainty, will a property market in Singapore crash? All these things coupled with all the market fundamentals in terms of demand and supply, who is your target audience when you want to sell your property, etc. All these things, I think, as long as you know what you're doing and you have a very clear understanding for 3 to 5 years moving forward, you have a very good overview and strategy. Definitely in the short term, there will be a lot more uncertainty, but just try to look beyond this period. What do you think is going to happen? So if you know, like, oh, it's going to drop or it's going to go up, then all the more you should be prepared and positioned accordingly. So if you feel like I'm a homeowner today, and then I would think that property market prices is going to drop, then it makes sense to sell because you want to time the market, right? So you sell today, then you buy cheaper lah. But if you don't think this is something that you are going to do, and you are quite confident that the market is going to rebound, then today it makes sense to also make a purchase or even upgrade to a bigger unit. Yeah, so all these things, you really need to think what is going to happen 3 to 5 years later, but not at the present. And second thing is, does this environment actually presents an opportune time to enter risk assets? So I'm not just talking about property, I'm talking about stocks. Because even like I know I hold a lot of ETFs, all this also drop. Crypto also drop. Even if you don't buy property, actually you can still buy stocks, you can buy crypto. As long as you know what is going to happen in the future and you know what you're going to do, is it a time to enter risk assets? And for property, right, when you already see, wow, even stocks also drop like 10%, 15%, but what is going to happen for the property market is the price dropped immediately. We don't foresee that because, of course, a lot of cooling measures, and in the end, it is an illiquid asset combined with home ownership. It is a leveraged asset as well, and it's definitely a different asset class altogether. what am I doing for myself? For property wise, I can't really do too much because my names are already used up. I am very likely going to start to dollar cost average into stocks, looking in the long term instead of the short term. Of course, it can still drop further. Based on previous results and inflation, I do still think stocks is gonna continue going up. And what are some of my clients actually doing? So for those that already same situation as me, the property already all used up in terms of names. They don't have spare name anymore. They will be looking to also invest into stocks or crypto. That is completely up to their own risk appetite. But I think smart money are buying in. For other clients that also got free name, we are already exploring options. Like for example, the RCR region, because I kind of determine where that is the next biggest opportunity for the next few months. For property wise, we already kind of know what to go for, and then some of them also continue to DCA into stocks because it actually dropped. There is also some clients that is still on the fence. Hey, I still think the market is gonna drop. That one is completely up to them. But for me, when I view the property market from a long-term perspective, this is definitely just a drop in the short term, if there is any. So next up, also, where does the next opportunity lie in? So for this one, definitely will have to depend on your budget and also which areas you are more competent in. For example, some people, they know the East very well. Then they know that, resale here or the new launch here will still do very well in the resale market next time. So they are quite confident to buy here. Or maybe some people prefer the West, etc. So for me, right, I will help you filter out in that particular area for the new launch or the resale where I feel can present a stronger exit strategy. Alright, so if you like my analysis, do feel free to leave a like and subscribe. And also, I have done my previous videos using the same kind of analysis. You can feel free to click on my YouTube channel to watch other videos. And if you need further advice, and if you're unsure what to do in today's market, be it if you're a seller, if you're a buyer, feel free to contact me via WhatsApp at 84849302, or you can click the WhatsApp link below. I feel like this is definitely the time to start thinking about your options. You don't necessarily have to make a move. If you already position well, you didn't suffer a very big loss in the stock market, your job is stable, then definitely you are looking at an opportune time to do something. Looking forward to your responses. Bye!